The history of banking is a captivating narrative spanning millennia. It is a tale that intertwines with the very fabric of human civilization, reflecting our evolving needs, ambitions, and technological advancements. It is a story of innovation, adaptation, and the constant pursuit of managing wealth and facilitating trade. From the earliest days, humans have sought ways to store and exchange value, leading to the birth of banking systems that have grown increasingly complex over time. From the rudimentary grain storage systems of ancient Mesopotamia to the sophisticated digital platforms of the 21st century, banking has been an integral pillar of civilization. These early systems were not just about storing surplus grain. They represented the first steps towards creating a structured economy. This essay embarks on a journey through time, exploring the key milestones in the evolution of banking. Each era brought with it new challenges and opportunities, prompting innovations that would shape the future of finance. We will delve into how this vital institution has transformed from humble beginnings to the complex financial networks that underpin our modern world. The journey of banking is not just about the evolution of currency, but also about the development of trust and the establishment of financial stability. This exploration will take us from the ancient civilizations of Mesopotamia and Egypt to the bustling financial centers of Greece and Rome. In these early societies, the concept of credit and debt began to take shape, laying the groundwork for future financial systems. We will witness the revival of banking in medieval Europe and the birth of central banks in the 17th century. This period saw the establishment of institutions that would become the backbone of modern banking, providing stability and fostering economic growth. Our journey continues through the Industrial Revolution and into the 20th century, marked by groundbreaking innovations like ATMs and online banking. These advancements revolutionized the way people accessed and managed their money, making banking more accessible and efficient. Finally, we arrive at the digital age, an era defined by the rise of fintech, cryptocurrencies, and the transformative potential of blockchain technology. Today, banking is more dynamic and interconnected than ever before, with digital platforms enabling instant transactions and global financial integration. As we look to the future, the legacy of banking continues to evolve. Artificial intelligence and machine learning are poised to further transform the industry, offering personalized financial services and predictive analytics. The global financial network is becoming increasingly seamless, breaking down barriers and creating new opportunities for economic growth. Moreover, the focus on sustainability and inclusivity is reshaping the banking landscape. Community banking initiatives and sustainable finance projects are gaining traction, aiming to create a more equitable and environmentally conscious financial system. The enduring legacy of banking is not just about wealth accumulation, but also about fostering a better future for all. In conclusion, the history of banking is a testament to human ingenuity and resilience. From ancient grain storage to digital currencies, banking has continually adapted to meet the needs of society. As we move forward, the lessons of the past will guide us in navigating the challenges and opportunities of the future, ensuring that the legacy of banking endures for generations to come. The roots of banking can be traced back to the cradle of civilization in Mesopotamia. This region, often referred to as the birthplace of human civilization, saw the emergence of some of the earliest forms of financial systems. Around 3000 BCE, temples in Sumer began acting as custodians of grain and other valuables. These temples were not just places of worship, but also served as the central hubs for economic activity. These institutions developed systems for storing and lending these assets, effectively serving as early banks. The priests and scribes who managed these temples were responsible for keeping detailed records of deposits and loans. Records inscribed on clay tablets reveal sophisticated loan agreements, interest rates, and even early forms of debt contracts. These tablets provide a fascinating glimpse into the economic life of ancient Mesopotamia, showing how they managed credit and debt. Across the ancient world, in Egypt, a similar system emerged. The Egyptians, known for their monumental architecture and advanced society, also developed intricate financial systems. The pharaoh's treasuries, managed by scribes, played a crucial role in the kingdom's economy. These treasuries were responsible for the collection and storage of wealth, which included grain, precious metals, and other valuable resources. They collected taxes, distributed grain, and financed large-scale projects. The efficient management of these resources was essential for the construction of the pyramids and other grand structures that Egypt is famous for. These early practices in Mesopotamia and Egypt demonstrate that even in the ancient world, the need for secure storage, efficient resource allocation, and access to credit was paramount. The systems they developed laid the groundwork for modern banking and finance, showing that the principles of managing resources and credit have been essential to human societies for millennia. The legacy of these ancient financial systems can still be seen in the way we handle money and credit today, proving that the seeds of finance were indeed sown thousands of years ago. The ancient Greeks further developed banking practices, establishing themselves as key players in the Mediterranean world. In bustling city-states like Athens, private individuals and temples offered loans and facilitated trade. The island of Delos, a major commercial hub, housed numerous banks and financial institutions. Archaeological discoveries on Delos have unearthed detailed transaction records, offering invaluable insights into the financial mechanisms of the time. The Roman Empire witnessed the rise of specialized banking institutions. These argentarii conducted business in designated buildings, offering services like money changing, loans, and deposit taking. Roman law played a significant role in formalizing banking practices, introducing concepts like legal contracts and standardized documentation. The Roman Empire's extensive trade networks relied heavily on these increasingly sophisticated banking systems. Section 4. Medieval Banking Revival, the Church and the Rise of Commerce from 1100 to 1500. This period marked a significant transformation in the economic landscape of Europe, driven by the interplay between religious institutions and burgeoning commercial activities. Following the decline of the Roman Empire, banking activities in Europe experienced a period of relative stagnation. The once thriving trade routes and financial systems fell into disrepair, and the continent entered what many historians refer to as the Dark Ages. During this time, the Church became one of the few stable institutions, preserving knowledge and maintaining some semblance of order. However, the revival of trade and commerce in the late Middle Ages brought about a resurgence in banking. As European towns and cities began to grow, so did the need for more sophisticated financial services. Merchants and traders required secure ways to transfer money and finance their ventures, leading to the re-emergence of banking practices that had been dormant for centuries. The Knights Templar, a powerful religious order, played a significant role in this revival. Founded in the early 12th century, the Templars initially focused on protecting pilgrims traveling to the Holy Land. However, they soon expanded their activities to include financial services, leveraging their extensive network of commanderies across Europe and the Middle East. They established a system of cheques, allowing pilgrims to deposit funds in their home countries and withdraw them safely in the Holy Land. This innovative system not only provided security for travelers but also laid the groundwork for modern banking practices. The Templars' financial acumen made them one of the most influential organizations of their time. In Italy, prominent families like the Medici and the Lombards emerged as powerful banking forces. The Medici family, in particular, became synonymous with banking and finance. Originating from Florence, they established one of the most successful banks in Europe, which played a crucial role in the economic development of the region. They developed sophisticated bookkeeping methods, including double-entry bookkeeping, which revolutionized financial record-keeping. This method allowed for more accurate tracking of transactions and became the standard for businesses across Europe. The Medici and other banking families also engaged in international trade financing, providing loans and credit to merchants and governments alike. The Medici family, in particular, amassed immense wealth and influence through their banking activities, becoming key financiers to kings and popes. Their financial empire extended beyond banking as they invested in various industries and patronized the arts, contributing to the cultural flourishing of the Renaissance. Their story illustrates the growing power and reach of banking in this era. The rise of commerce and the influence of the Church created a dynamic environment where financial innovation thrived. This period laid the foundations for the modern banking system, shaping the economic landscape of Europe for centuries to come. The interplay between religion and commerce during this time was a driving force behind the economic revival that transformed medieval Europe into a hub of trade and finance. Section 5. Birth of central banking, shaping national economies from 1600 to 1800. The 17th century marked a turning point in the history of banking with the establishment of the first central banks. In 1694, the Bank of England was founded, initially to finance the English government's war efforts. The Bank of England introduced the concept of a national bank with the authority to issue banknotes and manage the nation's money supply. Another influential institution was the Amsterdam Wisselbank, established in 1609. The Wisselbank acted as a clearinghouse for various currencies, facilitating trade and stabilizing exchange rates. These early central banks played a crucial role in shaping national economies and laying the groundwork for modern monetary policy.